If you are a business owner, these are the 6 words you must understand before you continue doing business. My name is Michael Barayev, and I built a team of over 150 plus sales guys. We did that with less than 2.5 years with zero money invested, and now we have a solar company that's growing like crazy from coast to coast, like butter on toast. So, if you're a business owner, or you plan to be a business owner one day, okay, you have to understand these 6 words. If you do not understand these 6 words, do yourself a favor and start educating yourself immediately on these words. I'm going to go into a little bit of depth in them, but you need to take time and understand the concepts, because if you don't understand these words, you are in big trouble when it comes to building your business. Okay, number 1. Okay, this is number 1. Profit and loss. What is profit and loss? Well, every business needs to understand there's a profit and loss. Okay? Now, some years you may be losing, some months you may be losing, some months you may be winning, some years you may be winning, but you need to understand what does your profit and loss statement look like. And your profit and loss statement looks like this. You have the revenue, okay, which is the money that's coming in. Customer gave you $1,000, commissions paid, whatever. You had $1 million come in, let's say, okay, $1 million, $1 million, okay, and you had expenses. Okay, it's very common, basic understanding of business. You have expenses. Let's say it was $600,000. It could have been commissions, it could have been utilities, could have been rents, could have been supplies, could have been a bunch of stuff. Could have been travel, right? Whatever it is. And then you're left with your profit and loss, which is what? This is your gross profit. You had $400,000 in gross profit. Okay? Or net profit, you would say. Net profit. Okay? Net profit. This is your net income. You need to understand that. So a lot of people, what they focus on is oh, how do I decrease the expenses? Big no-no when it comes to your profit and loss. Yes, you should focus on not spending a lot of money. I understand that. But the main thing you should focus on that's going to give you way more control in your life and give you way more peace of mind is how do I increase the revenue? A lot of people make this mistake. Oh, how do I decrease expenses? They cut this out, cut this out. In times of crisis, you focus on increasing revenue. You go all in marketing. You go all in on sales. You go all in on increasing the revenue, right? And usually there's 2 things that help you with that. It's either marketing and sales, or usually it's both. Okay? But you need to focus on those 2 things because that's what really saves companies, right? For us in our business, we recruit people, so recruiting brings in the sales. The more people we have in our company that go out there and crush it and sell, the more revenue we have as a business. So our main focus, bad economy, good economy, we focus on how do we increase the revenue. Now, do we focus on decreasing expenses? Here and there, yeah, but 95% of my time is focused on how do I get more revenue to the company, and then 5% of my time is how do I lower expenses. And I can always pay someone to focus on this. But my focus as a CEO, my focus as an owner, is how do I focus on this? What can we do? What can we do to get the company to have more revenue coming in? What are some channels that we can create to bring in more business? Now, next, balance sheet. What does the balance sheet mean? Most people don't even know what a balance sheet means. Scary. You're a business owner, you still don't know? It's okay. We're here to teach you. Asset equals what? Liabilities plus equities. Okay, you need to understand a balance sheet very well. What is an asset? Now, I know Robert Kiyosaki talks about, money that's coming in is usually an asset. But in this situation, in accounting terms, an asset is anything that you owe or anything that you actually own. So, for example, let's say your business, okay, let's say you have $1 million in assets, okay, and you owe $300,000 in liabilities. Could be accounts payables. You owe credit card loans or whatever. You have debt that you have that's $300K, right? Because that's not your money. Liabilities are not your money. Liability is what you owe. Equity is what you own, okay? So if you have $700,000 in the bank account, as an example, and you have $300,000 you owe, okay, these are your assets. $1 million in your business, you owe 300, you have 700 in equity, okay? You own this, someone else owns that. Very important to understand your balance sheet. How much money do you have in your bank accounts? What are your assets that you have? Do you have any cars, trucks, equipment? This is an asset. Could be $15, whatever it is. Your chairs are assets. If you had to liquidate the whole business, how much do you owe? Are you in debt? What is your percentage on interest? You need to understand these things because if not, you're never going to grow your business. It's a very important, you have to understand the balance sheet. This balance sheet tells you the health of your business. There's a lot of businesses that have a lot of revenue. They're making a lot of money, but their balance sheet is upside down. Their liabilities are very, very high, and they have very little equity. And you could sell the company, just that you don't own that much of it. Right? If you need to liquidate for whatever reason, you don't have that much control. If you have 95% of your business in liabilities and 5% equity, that's a scary place to be. You need to understand how this dynamic works out in your business, okay? So go study a little bit more on how to understand a balance sheet, okay? Because the balance sheet will tell you the health of the business. Third phrase, cash flow. Most people have no clue what cash flow means. I'll give you guys an example. Let's say you're in solar. You make a sale, okay? You got to pay a commission to the person that set the appointment. Let's say $1. You got to pay the sales guy. Let's say $5. Okay? As an example. Okay? You got to pay $1 to the person that set the appointment, $5 to the sales rep. You got to pay expenses, $5. Okay? Throughout the process, you're paying out expenses. Let's say it's $20. You don't get paid as a company until it gets installed, as an example. Okay? You need to make sure you have enough cash flow coming into your business. How much money is coming in versus how much money is coming out on a weekly basis. You need to study that on a weekly basis, on a daily basis, on a monthly basis, because if you do not pay attention to your cash flow, you may see your bank account at $20,000 and you say, oh my God, I'm not making money. Oh my God, I'm in a big situation. I can't pay rent, I can't pay employees. So you need to monitor your cash flow. How much money is coming in versus how much money is coming out. Most people have no clue. They're just spending money. They don't even know how much is coming in. They go, oh yeah, I got 20 grand coming in next week. No. You need to understand where it's coming in from. When is it coming in? You need to understand that, okay, if I invest $30, right, 5, 10, 30, 31, right? If I invest $31 and I'm going to make 100 in 3 months or 2 months or 1 month or whatever it may be, how does that work? How much can I, if I have 20,000 in my bank account, how much can I invest before I'm tapped out? Because it takes time to get that money. So you need to understand cash flow. And most business owners do not understand cash flow, and that's why they go out of business. That's why you want to grow at a very good rate, not too fast, not too slow, because if you grow too fast, you'll burn out your cash. That's why a lot of companies, especially if they're selling a product, they have all this inventory, they can't do shit because they don't understand their cash flow. Very important to understand cash flow. I'm not going to do too deep into these conversations because I want you guys to go study this on your own and understand what is cash flow. Go look at a balance sheet. Go look at big companies and study those things, okay? Next word you need to know as a business owner, okay? KPIs, okay? Very important. Key performing indicators is what KPI stands for, okay? KPI, key performing indicator. You need to know your numbers. You need to know your metrics. For example, our sales guys, we know exactly how many people they need to speak to get a certain amount of appointments, how many appointments they need to get a certain amount of presentations, how many presentations they need to get a certain amount of closes, how many closes they need to get a certain amount of site surveys, how many site surveys they need to get a certain amount of installations, how many, like, you got to know those numbers and you got to know the KPIs. So you can basically say, okay, if I have 10 people I speak to, and out of those 10 people, I get 5 appointments, and out of those 5 appointments, I sit down with 3 of them, and out of those 3 people I sit down with, I close 1, right? Now I know my key performing indicator. So if the guy is talking to 20 people and has 1 appointment, I know what I need to coach him on. So you need to know what your KPIs are for every single department, every single person, every single position. You need to have that documented. What are the metrics in your business? If you don't have this in place, you don't have a business. You have a shit show and a circus. Because everyone's doing whatever they want. They have no idea what they need to accomplish. And by the way, every position can have KPIs. Every position, every department, right? It has to have that so you can track your business. Remember, if you track your business will communicate to you in numbers and data. And that's why we have a business intelligence guy that literally is hired to just build data, build all that information for us so that we can make decisions as the business owner, as a CEO, whatever it may be, to make decisions on what needs to get done. Okay? Next. Cost of lead or cost of acquisition. Very important. How much does it cost you to get a sale? This helps you with your cash flow. This helps you with your KPIs. Let's say, for example, you have to spend $1,000 to make $10,000. Is that a good deal? Amazing deal. I spend $1,000 to get $10,000. I'm in business all day. What if it costs me $1,000 to make $1,500? Difficult. Can you still do it? You can. You don't want to be in a position where it costs you $1,000 and you make $800, because now you're what? You're losing money. So your cost of acquisition is very important to understand. right? The bigger the ratio, the better. If it's a 1 to 10, this is a 1 to 10 ratio, right? 1 to 10. This is a, I don't know, 1 to 1.1.5, right? This is like 0.8. You're in a very bad situation here, okay? But the bigger you can get the ratio, the bigger the spread, the more you can make mistakes in your business. And remember, in marketing and in sales, the person who can spend the most will outlast everyone else, right? If you can spend more money than your competition, you will outlast them. Because if you're able to spend 1,000 and get 10,000, okay, and they can only spend 800, or they can only spend 600 or 500 as an example, right? Because they're not making as much profit, then guess what? You win the ball game. So you want to make sure you track the numbers on that, okay? Know your cost of acquisition, know your cost per lead, know those numbers. It's very important data. And last is your SWOT analysis. Very important to understand this. Every business should study this. You need to know your strengths, right? You need to know your strengths. You need to know your weaknesses. You need to know your opportunities. And you need to know your threats. What are your strengths? What are the things that you can do that nobody can do? What are some good things in your business? What are you guys known for? What are your strengths? What are your pluses? What are your weaknesses? What are your negatives? What are some things that you guys suck at? Right? Like we look at it all the time. Like what are we good at? What do we suck at? Maybe you can hire someone to do it for you. Outsource a company. Right? Maybe you can work on your weaknesses a little bit. I always tend to focus on your strengths. If you're good at something, go all in on your strengths. Okay? Maybe outsource or hire someone with the weaknesses. Next, you need to know the opportunities. What are the opportunities you have in the marketplace? We chose Miami for a reason to do business here because it was an opportunity that nobody else saw. It was a blue ocean for us. Okay? But with that, there comes what? Some challenges. So be aware of that. And also be aware of all the threats. Be aware of all the threats that can come into your business. Competition, market changes, regulations, the economy. Like for example, right now, the interest rates are a little bit affecting a lot of people right now, right? You have banks that are getting affected, mortgage people, real estate people, and even us because we're using financing to help people go solar. So it can be a little bit of a smack in the face when you have to give them a higher interest rate and the banks have to make more money on those deals, right? So you got to know what the threats are. You need to understand your business. So look at your strengths, look at your weaknesses, know your opportunities, understand your threats, and I guarantee you, with these 6 powerful words, you are now starting the foundation of understanding how to be a real business owner. Because a lot of people don't even know half the shit we just talked about, and that's a scary place to call yourself a CEO or a business owner or an entrepreneur or whatever you want to call yourself. So I appreciate you guys. I love you guys. Thank you so much for sharing this video with someone and commenting and liking on this video. I appreciate you once again. Subscribe, and I'll see you guys in the next video.